Hello everyone. So in this session we will focus on recording the transactions. Just a quick recap of what we studied earlier. We went through the general process of how accounting works. So the business or the individual will choose a system. They will build their chart of accounts on how things flow, and then they will start booking or recording these transactions. Then there will be the regular review, and of course finally they will generate the report from the system. So why did I start with this? Because it is the main thing that if you will get an accounting job, most likely you will be doing this. So let's start as if we are opening a business right now, a coffee business. You chose your system and you also built your chart of accounts, so it's already linked and it will automatically generate your financial reports. So now all you have to do is booking and reviewing. So let's say that you invested $5,000. You bought your coffee and beans for $500, and then you sold it for $2,000. So basically you sold all the inventory with the coffee and the cups, and you paid your bills. The idea here is to know what will go up for the business and what will go down. So what do I mean? See, when you add money for the business, you are adding value to it, right? You invested money. So when you put your own cash, it will raise something to the business. And then when you work on your items, your inventory, and produce a good product and sell it for more price, you are generating value. So let us break down the transactions practically. We are still not going to be in the theoretical part. It's just about understanding how it works. So when you invested your $5,000, you've put money from your own pocket. So from the business side, it has now ownership increase of $5,000, and it owes money for the owner. Then out of this money you bought supply. The business had the $5,000, but now it paid $500 to buy the supply, and it got the supply increase. So if you see, there is always two variables, sometimes more, of something increase and other thing decrease. Then when you sold all the coffee, after working on it and processing it, the supply is gone now, and you got cash with additional benefit. If you see here, it's not balanced. It's 500 and then there is 2,000. But this is what happened. And of course you paid the electricity bill, which the business used to operate the business, and the cash went out. So the idea here is just know that when you book in accounting, it's about looking at things from two different angles. Something that adds value and something that benefit or costs the company. Now let us break down these transactions in a bit theoretical way. Debit and credit. These two terms, if you are studying accounting, I'm sure you heard of them. It's just the way they give name for the transactions as a reference, and once you memorize them, you will realize that it is just a protocol that they've been doing. Anyway, later on I will show you some trick also to memorize them easier. When you invest, you debit the cash and you credit the owner equity. Try to think of it like debit is something positive. It increased the cash, and the owner equity now it owes money, so it credit the owner equity. Then again, it bought coffee. It increased the inventory, which is debit, and decreased the cash, credit. When it sold all the coffee, it gained the cash, debit, and then credit the revenue. Also, if you notice, there is the reducing of stock, because Yeah, we still have supply, but now there is no supply. We used it. So we will just credit the inventory, reduce the number of inventory, and debit the cost of goods sold. It's basically because it's cost of producing this revenue. And finally, we paid cash for the bill, and we benefited from using the electricity. This thing, you don't have to worry much about it. With practice, you will realize it's simple, and also later on you will realize actually when you use accounting system in real life, you may not even use this. You will just use some direct transactions on a system. Anyway, this is how it works in real. You will have the system, and then it will be certain, depending on how the system works. You will just say, oh, we received cash, so you will just click a button, add cash, for example, for a sale, an actual sale, and then you will say revenue, which is sale received. Usually it will be just one button. You'll say, oh, we made a sale. You'll click on sale, and it will automatically put the debit and credit by itself. Even if your sale was on credit, you will say sale, and then you will choose, oh, sale on credit. We didn't receive the cash yet, and it will automatically generate. So as if you are receiving customer money at the last step, you sold on credit, but then the customer paid, you will just say we received this related to this customer, and it will automatically generate. So the idea in real life, what will happen is you will just have your system, and you will choose one side of the transaction, and the system will automatically understand the other side, and it will connect it to your chart of accounts. Anyway, if you are into the theory, here's a cheat sheet. You can take screenshot of it. But generally, when asset, expenses, and drawings or dividends increase, it's debit. When liabilities, owner equity, revenue, because it's something the business owes, when it decrease, it's debited, and when it increase, it's credited. Here is how I like to look at it. If you just want to know the quick way to remember this tactic, it's basically cash increase is always debit. Imagine you have a debit card, you have your cash, you own it. When it increases, it's debit. So now, for you to remember any transaction that includes cash, just think about it. Did the cash increase or decrease? If it's increased, automatically put cash debit, and then the other side of transaction is definitely credit. Liabilities is always credit. Remember the credit card. You don't own the money, so they will always ask you for money. So when the liability increases, it's always credit. So once you do that, it will be a quick way to remember the debit and credit aspect.